It has been a challenging period of trading for Quixant and, importantly, our customers as well. In the gaming part of the business, we've seen reduced consumption rates from several of our larger accounts, and that is really just driven by our customers suffering increased competition in their businesses. So whilst trading in the first half of the year is in line with expectations, and we are expecting a strong second half of the year, it's fair to say that that second half is not as strong as we were expecting. And that's because of this continued deepening competition from certain manufacturers in the industry that's impacting our customers' businesses. Margins have remained very robust through the period, and we've seen lots of exciting opportunities in other parts of the business, including within the Densitron business and in the sports betting market. And so what we're seeing is an increased diversification effect in Quixant's overall group performance from other revenue streams, which is obviously a positive direction for the business to be going in. So the overall gaming market remains robust, and Quixant hasn't lost any business during this period. It is just down to slower consumption from our existing customers, which are suffering with this competition to their businesses. However, as their game performance improves, that would naturally lead on to improvement in their consumption rate with Quixant, and that will generate growth. In addition to that, though, it's also important to say that we are converting lots of new business into Quixant. Of a $30 million pipeline that we signalled in March of this year, we've converted 12 million of that pipeline in the first half of the year. And what that will lead to is improved performance in Quixant over the next 1 to 2 years as that starts to flow through into our revenue. Densitron is really well positioned now. We have performed in line with expectations in the first half of the year and expect to do so in the second half as well. The new management team is performing extremely well and has instigated significant organisational change, which is leading to new opportunities being uncovered. In the broadcast sector, we've now got a pipeline of $9.5 million, which is up from the $4.5 million pipeline signalled at the end of March. So really we see very exciting growth prospects for Densitron in the medium term and expect growth in 2020 from the business.
Despite the fact that the profits and revenues for the period, and as we're now currently forecasting for the second half of the year, are down on 2018, the business remains quite profitable. It generates cash and has still got a strong balance sheet, and which has allowed us to make an acquisition after the period end, but should still allow cash flow to be positive and grow in the second half of the year. That said, gaming revenues are down in the period, as Jon mentioned, because of the large customers' consumption. That's mainly in gaming platforms, which is down 27% to 19.6 million in the period. Gaming monitors revenue is also down, but there's a positive mix going on in there in that we've grown revenues from the high margin button decks by about 14% year on year, and we've reduced revenue in the low margin monitor area where we said we would move away from it at the last set of results. The Densitron business is roughly flat year on year, despite the fact we've sold the Nordic business, which was loss-making, and we expect that to come through to the 2018 revenue level for the full year when we report in a few months' time. That's given us adjusted profits of just over 3 million for the year, and no further restructuring charges again, as we said at the last set of results. The cash flow has been very positive. We've ended the period with $12.4 million in the bank against 2.5 million for the same period last year. And with the extra forecasting systems and procedures we've put in place following the information we've had recently from our customers, we think we can make sure that number grows in the second half of the year and into 2020. We have put systems in place alongside the new implementation of SAP, which has been going on for most of this year. And those will give us much more confidence about what we can say about the timing of revenues and profits going forward, and therefore the forecast that we've announced in recent days for the second half of this year and going into next year.
We are really confident in the future outlook for Quixant. Our opportunities within the land-based gaming market are undiminished, and indeed we have generated lots of new business which will generate growth within the next 12 to 24 months. With the sports betting opportunity and the Densitron broadcast business opportunity, our existing growth from land-based gaming is diversified into other areas, and that leads us to believe that Quixant will be a strong growth stock over the next few years.